As of this morning, Bitcoin is down almost 34% from its late June highs. President Trump hates crypto, and Congress is grilling Facebook over the Libra coin. Many crypto investors are taking profits while the bear is in control. After last month's euphoric rally, everyone is scared. So what do I say? Good. Hi, this is Doc from Ready Set Crypto with your 1-minute market update for Wednesday, the 17th of July. Today's situation creates what I've heard referred to as the principle of maximum adversity. This is the intersection where the inexperienced retail investor feels the most heat versus the professional sensing the most opportunity. You've probably heard those such as Warren Buffett say to be fearful when others are greedy and be greedy when others are fearful. When maximum adversity kicks in, you're most apt to make those decisions that you'll regret later. So Buffett's advice is very hard to follow during these times. So is every pullback a gift? Well, I would say no. This is where I fall back to the 4 major rules that I created in my fractal energy trading program to keep me on the right side of the market. Let's briefly go through these and see how today's Bitcoin market stacks up against them. Rule number 1 is that larger time frames dominate the overall trend. I'm hoping that you already understand that when we compare a larger object's momentum versus the momentum of a smaller object, the larger object will invariably win that contest. I can come up with hundreds of similar analogies that apply outside the financial markets, and I contend that markets are no different in this regard. What this means is that when you have a larger time frame trend, such as this weekly chart uptrend and above, those normally dominate, so that pullbacks or downtrends that you'll see on the daily chart, like in today's example, normally revert back to the weekly chart uptrend. So for rule number 1, the weekly chart uptrend is still in control, so I give the advantage to that uptrend until it's no longer in play. Rule number 2 of the fractal rules is that reversals begin from the inside out, or smaller time frames, and those reversals will propagate into larger time frame reversals. Let's see an example of that. If we go to the hourly chart of Bitcoin right now, what we see is that we have a current downtrend with lower highs and lower lows. Now, what will happen when this reverses, we've got a little bit of a positive bounce off the bottom, but this is not a reversal yet. So when it does reverse, we'll change this polarity into a series of higher lows and higher highs, higher lows, higher highs. That reversal at a smaller time frame will eventually propagate into the daily chart when it does happen, and then we'll see this transition into something like this. So that little initial bounce will probably lead to some form of higher low and then a higher high, and then the daily chart starts to reverse back into an uptrend. So it's very important that you understand how the different time frames fit together almost like puzzle pieces in a major puzzle that you have to solve. So as far as rule number 2 in reversals, we don't have any smaller time frame reversals just yet, but they will occur rapidly when they do. Typically, this is where we run into short covering that causes rapid movement off of a short-term intermediate bottom. Our next fractal rule is number 3, and descending patterns break to the upside and vice versa. What does this mean? What we're seeing here is that a descending chart trend, such as this on the hourly chart, has got a certain trend line that goes along with this, and you can see that here in the pink. So what we're going to expect that at some point here, this descending pattern, which creates this descending trend line, will eventually break to the upside. So everything drops has to rise. Unless it's going to drop to 0, eventually at some point it has to rise. Every rising pattern has to break to the downside. Every descending pattern has to break to the upside. It's a law of nature. So eventually, at some point here, when we start to print higher lows and higher highs on the hourly chart, we will break this trend line at or around this same time. And it can be a very powerful but simple rule that can help us anchor that change in polarity at a smaller time frame. For our trend line break, right now we don't have any breaks yet at the hourly or below, but it should coincide with an hourly reversal when that does occur. Rule number 4 of the fractal rules is that range expansion leads to range contraction of the price, and then conversely, range contraction of the price leads to range expansion or the next trend again, and then this just repeats again and again and again, or forever. For example here, the recent trend that we had into June was range expansion. Notice how the range expanded to the upside, almost all the way to 14,000, but everything has got a limit. If you want to summit a mountain, you can't just run up the side of it in one day. So range expansion gives way at some point at exhaustion to range contraction. This is what's been going on for the last 3 to 4 weeks in the Bitcoin market as we've dealt with that exhaustion to the upside by going into more range-bound price behavior. And here's how the puzzle pieces fit together. Range contraction on a larger time frame, like the weekly chart, usually causes a smaller time frame trend in the opposite direction, like now with the daily chart. This is a daily downtrend. So while the weekly chart is chopping around and just consolidating in that range contraction, this is actually causing a counter trend in the daily chart. This is why this is all happening. But guess what? Because nobody's watching the weekly chart, all everybody's focused on is the daily chart. And this is why they're tearing their hair out, because it's a downtrend and they're scared to death. This is how this all fits together. The weekly expansion move has yielded to a weekly contraction mode. The contraction happening now is exactly what the chart needs. This is all very normal. So let's do a quick summary of the 4 rules here. Number 1, that larger time frames dominate. We still have that weekly chart uptrend is still in control. Number 2, reversals start from the inside out. There is yet no hourly chart reversal to an uptrend. And rule number 3 is that descending intraday trend line, descending patterns break to the upside. We haven't seen that yet. And then number 4, currently in weekly range contraction and a daily downtrend. Price is doing exactly what it should be doing right now. And that's how I use the 4 major price rules to let me avoid the drama and to make objective decisions. I teach these topics on a daily basis with our Omnia community. So if you're letting fear rule your decisions, consider joining us in the link below. Let me know your thoughts in the comments below, and I'll see you in the next 1 Minute Market here at Ready, Set, Crypto.